Look at the silver charts today. Something doesn't feel right. The price was climbing steadily all morning. Then, in a matter of minutes, it hit a brick wall. You've seen this pattern before. It's not just normal market volatility. Huge sell orders are hitting the exchange at the exact same time. Who has that kind of volume to dump at 3 a.m.? It's almost always the big bullion banks. They aren't selling physical silver. They're trading paper contracts to suppress the price. Why would they want the price to stay low? Think about their short positions. The banks are heavily bet against silver. If the price skyrockets, they lose billions. So they use their massive capital to lean on the market. It's a classic move to shake out small investors. They want you to get scared and sell your physical metal. Have you ever wondered why the premiums stay so high? The spot price says one thing, but the coin shop says another. That gap exists because the paper market is a lie. Physical demand is actually surging right now. Solar panels and electronics are eating up the global supply. Mines aren't pulling enough out of the ground to keep up. Yet the price on your screen keeps dipping. It feels like a rigged game. Honestly, it's frustrating to watch. But this manipulation can't last forever. Eventually, the physical reality breaks the paper shell. The banks are just buying themselves more time. They're trying to cover their tracks before the next leg up. Did you notice the sudden drop during the London Open? That's a signature move for the big players. They wait for the moment of least liquidity, then they hammer the bid. It creates a panic sell-off. Stop-loss orders get triggered everywhere. The price falls even further. And who do you think is buying at the bottom? The same banks that pushed it down. It's a cycle of accumulation at your expense. They want the silver, they just don't want to pay full price for it. It's a bold strategy. And they've been doing it for decades. But the world is changing. More people are starting to see through the smoke. Central banks are even hoarding metals themselves. Why would they do that if they thought it was a bad investment? They know the dollar is on shaky ground. They just don't want you to know it yet. Look at the inventory levels at the COMEX. The registered silver vaults are draining. We are seeing millions of ounces moving to eligible status or leaving entirely. That silver is headed to private hands and industrial warehouses. The paper-to-silver ratio is reaching an absurd level. There are hundreds of paper claims for every single physical ounce. What happens when everyone wants their metal at the same time? The banks know they can't fulfill those orders. That is why they are fighting so hard to keep the price suppressed. They need to discourage you from taking delivery. If you hold the physical metal, you're outside of their system. They can't liquidize your silver with a keystroke. Have you checked the latest mining reports? Production in Mexico and Peru is struggling. Labor strikes and rising energy costs are hitting the miners hard. The cost to get silver out of the ground is rising every year. In some places, it's getting close to the actual spot price. No company is going to mine at a loss forever. When the miners stop selling at these low prices, the supply vanishes. The banks are playing a very dangerous game of chicken. They are betting that the economy will slow down first. They want industrial demand to drop so they can exit their shorts. But silver isn't just an industrial metal. It's been money for thousands of years. The public is starting to remember that. Inflation is eating away at your savings every single day. Your grocery bill is the only proof you need. People are looking for a lifeboat. Silver is one of the last undervalued assets on the planet. Compare it to the stock market or real estate. Those markets are sitting at all-time highs. Silver is still trading way below its record from 1980. Does that make any sense to you? With all the currency printing since then, it should be much higher. The only explanation is active intervention. The regulators seem to look the other way. Fines are handed out occasionally, but they are just a cost of doing business. $1 billion fine is nothing if you made $10 billion on the trade. It's a slap on the wrist. The banks consider it part of their operating budget, but the physical market is much smaller than the gold market. It's easier to corner, but also easier to break. A small shift in retail buying can cause massive ripples. If every American bought just 1 ounce, the market would seize up. The banks are terrified of a coordinated move into physical metal. That's why you see these sudden flash crashes on quiet Sundays. They want to make silver look like a bad investment. They want it to look volatile and scary. Don't let the screen price distract you from the fundamentals. The fundamentals haven't been this strong in decades. Look at the trading volume during the last price dip. The volume of paper silver traded was 5 times the annual global mine production. How can that much silver change hands in a single afternoon? The answer is simple. It doesn't actually exist. It is a game of musical chairs played with digital numbers. The banks are hoping the music never stops, but the industrial sector is changing the rules. Electric vehicle manufacturers need silver for every car they build. They can't use a paper contract to solder a circuit board. They need the actual physical atoms. As these companies bypass the exchanges and go straight to the miners, the banks lose control. The available pool of silver is shrinking right in front of us. Have you noticed how many bullion dealers are out of stock lately? Sometimes the wait times for basic coins stretch into weeks. That is a sign of a broken market. The official price says silver is cheap, but you can't buy it at that price. You have to pay a massive premium to get your hands on it. That premium is the real price of silver. The banks are trying to hide that reality from the general public. They want you focused on the fluctuating line on your phone screen. If they can keep the price low, they keep the dollar looking strong. Gold and silver are the ultimate barometers of currency health. When they rise, it shows the world that the dollar is losing value. The Federal Reserve and the big banks have a vested interest in a low silver price. It's about maintaining the illusion of stability, but you can only hold a beach ball underwater for so long. The deeper you push it, the more violently it pops back up. We are reaching that pressure point right now. Do you feel the tension in the financial system? Banks are failing, and interest rates are all over the place. In times of chaos, people always return to what is real. You can't print silver. You can't manifest it out of thin air with a computer program. It takes years of work and massive amounts of energy to produce. That is why it has value. The banks know this better than anyone else. That is why they are the ones accumulating the most metal. They tell you to stay away while they fill their own vaults. It is the oldest trick in the book. Keep the masses distracted while the smart money moves into position. Look at the movement of silver from west to east. China and India are importing record amounts of the metal. They are taking advantage of these manipulated low prices. They are happy to take the silver off the hands of Western banks. The physical supply is moving to places where it will be held for the long term. Once it goes to the east, it rarely comes back. This creates a permanent deficit in the Western markets. The squeeze is happening slowly, then it will happen all at once. Are you prepared for the day the paper market finally breaks? It won't be a slow climb, it will be a vertical jump. Think about what happens when the big tech companies get nervous. If Apple or Tesla can't get silver, their production lines stop. They aren't going to wait for the COMEX to settle a paper trade. They will pay whatever it takes to secure physical delivery. This is where the banks lose their grip on the narrative. Industrial desperation trumps financial manipulation every time. Have you looked at the silver to gold ratio lately? Historically, it has sat around 15 to 1. Right now, it's closer to 80 or 90 to 1. That gap is historically massive. It suggests that silver is either extremely undervalued or gold is overpriced. Given the current economy, silver looks like the bargain of a lifetime. The banks are working overtime to keep that ratio wide. If silver started performing like gold, the whole system would shift. Many investors would rotate out of expensive stocks and into cheap silver. The banks can't afford that kind of capital flight. They need your money staying in the banking system. They want you in savings accounts and mutual funds. Those are things they can control and fee to death. Physical silver in a safe is a direct threat to their business model. It is wealth that they can't track or tax easily. Have you ever wondered why the media rarely talks about silver? When they do, they usually call it a dead asset. They tell you it's too volatile for a retirement portfolio. Meanwhile, JP Morgan has been building one of the largest silver hoards in history. Why would they do that if it was a dead investment? It's the classic, do as I say, not as I do strategy. They want the supply for themselves. They are essentially shorting the price to buy the physical at a discount. It's a win-win for them until the physical metal runs out. And we are getting very close to that point. The warehouse levels don't lie. You can manipulate a price, but you can't manipulate an empty vault. When a major buyer asks for delivery and the vault is empty, the game is over. That is called a failure to deliver. It's the ultimate nightmare for the bullion banks. If that happens, the price will reset overnight. It won't go up by percentages, it will go up by multiples. Are you watching the action in the secondary market? Private mints are paying way over spot just to get raw silver shot. This shows that the official price is completely decoupled from reality. The market is effectively splitting in two. There is the fake price for traders and the real price for owners. Which side of that divide do you want to be on? Most people wait until the news confirms the breakout. By then, the local coin shops are already sold out. The website's servers crash from too much traffic. The time to prepare is while the banks are still suppressed. They're giving you a gift, even if it feels like a frustration. Every day the price stays low is another day to stack. Don't let their mind games work on you. Look at the geopolitical landscape right now. Nations are moving away from the dollar in record numbers. When currencies fail, people look for something with intrinsic value. Silver has been that anchor for centuries. The banks know that a run on silver is a run on the system. That is why the price action looks so inorganic. Have you ever seen a commodity drop 5% on no news? It happens in the silver market almost every month. It usually happens right before a major options expiry. The banks move the price to make sure the most popular bets expire worthless. They are essentially the house in a rigged casino. They see everyone's cards because they handle the trades. It's easy to win when you control the board, but even the house has limits. They are running out of physical metal to back up their plays. The silver being traded today is often just a digital promise. It's a game of confidence that is starting to shake. What happens when the confidence disappears? People stop looking at the screen and start looking at their hands. If you don't hold it, you don't own it. That old saying has never been more relevant than it is today. The banks want you to think silver is a relic of the past. They want you focused on the latest crypto trend or tech stock, anything that keeps your wealth inside their digital fence. But you can't build a solar grid with Bitcoin. You can't build a cruise missile with a sovereign bond. The modern world is built on silver, from your smartphone to your medical equipment. It's everywhere. It is the most reflective and conductive metal on Earth. There is no substitute for it in most high-tech applications. This means the demand is inelastic. Companies have to buy it regardless of the price. The banks are trying to suppress a coiled spring. The more they push it down, the more energy it gathers. Look at the commitment of traders' reports. The managed money is often on the wrong side of the trade. The commercial banks are the ones who usually pull the strings, but lately they have been shrinking their short positions. This is a massive red flag for the bears. It suggests the banks are preparing for a move higher. They are switching sides before the music stops. They will let the price run once they are safely positioned on the long side. Then they will profit on the way up, just like they did on the way down. They don't care about the metal, they care about the profit, but you should care about the metal. It is your insurance policy against their games. The manipulation is a signal, not a reason to quit. It tells you exactly what the banks are afraid of. They are afraid of you owning real assets. Are you paying attention to the volume spikes in the overnight sessions? Those overnight spikes are designed to trigger automated selling algorithms. The banks know the computers will react faster than any human. By the time you wake up, the damage to the price is already done. It's a psychological war as much as a financial one. They want to exhaust your patience. They want you to look at your portfolio and feel like a loser. But look at the big picture over the last 5 years. Despite the crashes, the floor is slowly rising. The lows are getting higher every single year. The banks are losing ground inch by inch. Think about the new industrial uses that didn't exist a decade ago. The green energy transition alone requires massive amounts of silver. Silver paste for solar cells is a huge part of the market now. As governments push for more renewable energy, the squeeze tightens. The banks can't print more silver to satisfy that demand. They are trapped between a physical shortage and a paper debt. Honestly, it's a math problem that doesn't have a clean solution for them. Someone eventually has to pay the bill. Do you want to be the one holding the bill or the one holding the metal? The smart money is already making its choice. You can see it in the massive withdrawals from major exchanges. The registered silver is at multi-year lows. This is the silver that is actually available for sale. When that number hits zero, the paper market collapses instantly. There will be no more spot price because there will be no more spot metal. The price will be whatever the person holding the bar says it is. That is the definition of a true physical squeeze. The banks are doing everything in their power to prevent that day from coming. They will use every trick, every headline, and every flash crash they can. But they are fighting against the laws of supply and demand. History shows that supply and demand always win in the end. Currency resets have happened hundreds of times throughout history. Silver has survived every single one of them. It has outlived every bank and every empire. The current manipulation is just a tiny blip in the long history of this metal. Don't let the daily noise distract you from the generational opportunity. The banks are giving you a chance to buy at their suppressed prices. Eventually, they will stop selling and start buying. When the giants turn around, you don't want to be in their way. You want to be standing right next to them with your own stack. Watch the charts, but watch the vaults even closer. The real story isn't the price on the screen. The real story is the disappearing metal. Keep an eye on the delivery notices this month. The numbers are starting to tell a very different story than the headlines. It's a game of high-stakes poker, and the banks are bluffing with a weak hand. All you have to do is stay in the game. The physical metal in your possession is your seat at the table. Don't let them bluff you out of your position. The end game is closer than it looks.